Hello, everyone. Welcome to the trade findings and adjustments for March 4th of 2021. Today, we're going to create a short educational video on stock screeners. As of recent, I've had someone send me an email from Gorilla Trades who uses a proprietary stock screener. He has shared 12 of the triggers for that stock screener, and he's trying to keep 2 hidden. I've had someone ask me about stock screeners in artificial intelligence, and I've also had someone bring up a stock screener and ask me if it was any good. So really quick, if we can understand what is a stock screener, the reality is it's a program created to weed out certain stocks based on the individual's expectations. And what do I mean by that? Well, obviously there's certain points that we're going to be looking for where we want our stocks to meet that criteria. If the stock meets the criteria, then we buy, place a trade, and usually expect some kind of bullish / upward movement. And off we go. Now, there's some people like Gorilla Trades that has a proprietary stock screener. When you see the word proprietary, all that means is this: the criteria they use is a secret that anybody could replicate themselves. And remember, it's not any better than the person that programmed it. I kind of laugh when someone asks me, is this a form of artificial intelligence? And we just define that as IA. Yes, but remember, IA is only as good as the person who programmed it, and only good the moment we see the information. It's only good for that instant, that 5, 10, 2 minutes, 5 minutes. That's all it's good for. The markets are ever changing, always moving. So to define a position, a stock, an opportunity, it's truly only good for that moment. After that, it's changed and it can fall out of favor, out of the criteria that we're using for our stock screener. The IA that searched for that information, as the information changes, it's no longer relevant after we've looked at it for that one small moment in time. At Hurley Investments, we always tell you, investing is a process, which means the information is always changing. Hence, we primarily collar trade. We primarily say we think it's going some way, but we're going to hedge our risk in case we are wrong. Kevin, are you collar trading today? Not exactly. We do have some positions that are collared, but in general, we're letting things run right now for a rebound when stimulus gets passed. It will probably be a short-term sugar high rush for 3 to 5 to maybe 10 trading days in our market. So we're getting ready for it. Here we go. For those of you who are not familiar with E-Trade, here's E-Trade. Well, I'm trying to get to their main page. As you sign into E-Trade, you come to this screen or something very similar. This is a broker screen. It might be a little bit different. But up here at the top, you have accounts, trading, markets and ideas, what we offer. I mean, there's a search engine right here that you can find all kinds of things. But if you go to trading and go to stocks and ETFs, they try to give you things to help you. Market and ideas stocks. Let's go markets and ideas, and let's go to stocks. What E-Trade or all brokers try to do is to give you information. They try to give you significant amounts of information to help you make decisions. As you go to markets and ideas into stocks, you come up to an opportunity to find a stock screener. Whereas if you were to click on this stock screener, you are now ready to create your own proprietary stock screener. I go to show all criteria, and right now you can do something that Mr. Gorilla Trades does himself, or all these people that talk about this proprietary stock screener. Here you go. You get to do it right now. What do you want in it? Well, market segments. I want the Dow. I want the NASDAQ. I want the New York Stock Exchange. I want the S&P 500. You could define it even more and just go technology or something. But I want all of these because I've learned I can make money on all kinds of stocks and all kinds of sectors. You could change it to micro caps, small caps, mid caps, large caps. There's all kinds of different things. But I just inputted 4: Dow Jones, NASDAQ, New York Stock Exchange, S&P 500. I now have 4 inputs to my criteria for the Hurley Investments proprietary stock screener. Share price, I want it greater than $5, less than $1,000. I'm really not looking to invest in $1,000 stock. There's 2 more criterias that I'm looking for and going to use. Price performing versus the S&P 500. You could do less than 40%. You could do greater than 40%. I'm usually looking for stocks that outperform the S&P 500 by 0 to 20%. And it can be over the last 52 weeks. We now have 8 criteria points in our stock screener. I like to see price performance against industry that beats it. I also want that over the last 52 weeks. We now have 10 different criteria points. I don't care too much about the 10-day average volume versus the 90-day average volume. That's not important to me. The beta, less volatile, more volatile, not important to me. Short interest or percentage of the float, I could do that, but I'm not interested in that. But that would be a stock screener myself, that if we had more than 1% and less than 3%, that's a great short interest. We're expecting something to have a short squeeze and rocket higher. Opinions. Well, I want positive. You could do buys on through all these, overweights. I guess it really doesn't matter to me very much. You could create strong buys, but the reality is I just want positive. I don't think that's important, other people's opinions. The important part, fundamentals. You could put a PE ratio in here. PEG ratio, more than 1. Profit margins you could put in here. In all honesty, what I'm looking for more often than not just comes down to percent owned by institutions. But I could click on any of these. You know, profit margin has to be X dollars. The price to book ratio has to be at least 1. There's all kinds of things I could pick in here that go to fundamentals. But the biggest fundamental to me really comes down to, is it owned by institutions? Because if it's owned by institutions, all of the rest of this no longer matters. They've done their research. They know what we're looking for. They're looking for fundamentally sound companies. Earnings and dividends, you know, earnings per growth. You could get fancy with this. There's a lot in here that you could look at. If you wanted something with dividends, off you go. This is all information that you can create your own 52-week highs, lows, pricing above and beyond exponential moving average, ways to make all kinds of opportunities here. But if we were to just put in what we put in, we could view the results. We could save this screen. And we're going to go HI basic. And unfortunately, nothing came up. Nothing came up. There's nothing that met that criteria. Let's go back and let's clear all the criteria. Let's be a little different here. Let's create a proprietary where, in all honesty, we're looking for something that can have a short squeeze. We're looking for something that's been shorted that we can possibly get a big bounce on. I want to see everything between 1 and 3%. There are 1,759 of those available. I want to trim that down. What I really want is to see it on the S&P 500. Now we're only down to 289. Maybe I want large caps. How can I get this down? Let's make it to companies that are greater than $20 but less than 300. I want Morgan Stanley to tell me that they're equal weight. There we go. Now we're down to 100. And what else could I lower that down just a little bit more? I still want them to have profit margin. So I want it above the industry average. Let's see what our results are going to be this time. Now I'm going to have 72. I've got 72 that I can choose from. Alaska Air Group, ALK. Hey, that's one that I'm looking at. Didn't realize it had a short squeeze opportunity in it. Best Buy has a short squeeze. Cardinal Health has a short squeeze opportunity in it right now. Going through Conagra, Cummings has a short squeeze opportunity. But Dollar Tree has a short squeeze opportunity. I'm keep going through. Garmin has one. That's interesting. KeyBank has a short squeeze opportunity in it. That's one I've traded in the past that I may look to get back into. Mosaic has a short squeeze opportunity in it. Paycheck, Pfizer, PPL, little interesting. Skyworks, Target has a short squeeze opportunity in it. Verizon has a short squeeze opportunity in it. This stock screener is nothing more than short squeeze opportunities. We just created a proprietary screener that does nothing more than help us look for opportunities. When it's all said and done, all that a stock screener does is point out opportunities at that particular moment. We just created 2 Hurley Investments proprietary stock screeners. And so my job is now to go market these and have people pay me $100 a month to run these 2 stock screeners. Not just one, they get 2 stock picking screeners, proprietary for Hurley Investments. For $99 a month, I can send you out picks every single day. And we're set. That is the short answer to what proprietary stock screeners are. You guys have just created 2. You can now make your own up. You don't have to tell anyone. Keep it secret on what is in your stock screener because it's proprietary. But really, what all these jokers are doing is they're using a big brokerage house's stock screener, making their picks what they think are important and not telling anyone. And they're saying that they can do better than the stock market because of this artificial intelligence through a stock screener. My suggestion to everyone is do not waste your time. Do not waste your money purchasing a advisory that's doing a stock screener opportunity for you and paying them money to do it. You could do it yourself. It's not that hard. If there are any questions, you got to give us a call, 888-287-1030. My name is Kevin Hurley, and welcome to the understanding of what a proprietary stock screener really is. Thank you very much.